Good evening. This is the Elliott Wave update for the S&P 500 for Monday, August 15th, 2022. Not anything new to be adding to the current analysis or the labeling. Starting here in the daily picture, we continue to run in parallel the two counts. Both continue to have equal weighting right now on the probability scale of being in force. So what we did see today is the S&P, yay, broke above 4,300. Now, let me drop right down to that hourly chart. Let's get right down to business here. We've been looking for this completing move. And yet, within this fifth, I can tell you if that was the four, and we have 1, 2, 3, 4, 5, maybe not. The market continues to just go like, okay, we reached it, now we're going to drop, and then we're going to rally again, as everybody and their grandmother decides to think, you know what, look at it, it's building, I'm missing, and they jump back in, or they add, or they're doing whatever they do. But it would appear that the S&P truly wants to get up here. 4350, 4362. I think that likely we're going to start to run into some true slow down, put the brakes on mode, about 4320 to 28. So let me just back this out again and reset it so I can come back in and put up some internal fibs. I got to do it on the 4-hour chart. Sorry about that. And we're going to do that to see about this finishing of 5. So what I'm going to do is I'm going to put extensions from the bottom of wave 2, right there, to the top of wave 3, right there, to the bottom of wave 4, which, I'm sorry, that's not true. That's going to go, oops, I better get rid of that. Remove that drawing. Oh, got the wrong one. I'll fix that in a minute. Life is tough. There to there is where that third ended. And then this being the 4. Okay, these are not going to be totally accurate, but pretty close. So today we got up to 4307. The next up is 4324. Give it that extra 20 cents. And then we're heading right into a cluster. Finally, we start getting some clusters, and they're around 43.50 to 43.62. So first we have 43.23, then we have 43.55 up to 43.62, and then top side of 43.85. So we've got a cluster here, and then this has all been cleared. But the reality is that when I go look back at this hourly chart and I open this up, I can, that's 3 and the 4, and this is 3, and this is a 1, 2, 3 of 5, 4 of 5. Now we're in the 5th, and it's also subdividing. This entire process has been subdividing all the way up, and it just adds and continues to add to, of course, the rally. So the rally is building strongly. And again, it continues to build on what I'm really putting down as false narratives. There really isn't this whole dovish attitude coming out of the Fed. The Fed's still concerned. We still have inflation, folks. All you need to do is to step outside and start going and try to buy any consumer goods besides food. Everything else that we do in our house, those prices have all gone up. Prices of clothing have gone up. Price of cars have gone up. Price of everything has gone up. It's inflation. And the Fed is taking it seriously. And so they're not hinting. I've not read or heard where I have any Fed governor saying that, well, maybe in that September meeting, we're going to back off. We're going to really come in a little dovish. We're just going to wait. We're just going to take this wait and see. With all this hard work we're doing, look what it did to crude oil. No way. Crude oil is coming down for a whole different set of reasons. Now, does that help out with the inflation picture? Yes, it does. but it's not going to tilt the scale in favor of all of that inflation coming down. Not yet. We're not seeing anything yet. So, of note, and I want to go back out to the daily chart, and I can show you that. Notice the VIX, it finally broke back below and closed below 20. I want to review with you real quickly the last few times that that's happened. One time was here, went out for that low, which was 41.26 back in March. We got this grand announcement from some big bank. Oh, major oversold. It's extremely oversold. Blah, blah, blah. Market shot up and the VIX dropped below 20. Look at the result. Once again, we're oversold, we're oversold. Run it back up. I believe this was on actually a rate hike. And what happened? VIX drifted below 20. And we got this. So twice, once in March, once in June. So now are we heading there again? And could it stay here until September? Yeah, maybe, but I doubt it. We are so honing in. I think that also there's a lot of algorithms that are possibly tuned in to 43.23 to 43.50. That's how they're programmed to buy it up to that level. And they just might. Again, supply and demand. It was real strong today. Not that the volume was all that much greater, but I started to see bid and offer, 100, 150, 150 bid, 150 offered. I've not seen that type of volume come in to the S&P for quite some time. I mean, years ago, it used to be 500 up, 500 up bid offer, a tick apart, 500 up. So everybody would go trade the NASDAQ because the S&P was like almost trade by appointment. And you put your bid in and maybe you got filled and maybe you didn't. So you were always forced to go buy the offer or sell the bid. So now, much more volatile and much easier to move around. Now, what does that suggest? Going back down to that hourly chart. We have, as I've just said, we've got these continued resistance areas. We now got a nice, but to me is representing a very nice cluster of resistance. I am continuing to expect the market to find and put in a top. We're continuing to trail it up. Again, just extension after extension after extension. Let the market do what the market wants to do. I can't stop it. So now, what can we look for when this starts to break? Let's start in the hourly chart. Again, see if I can open this up. Here we go. More important, the 4 is just kind of guiding it after hours. It just kind of sits there. More important, it needs to break the 8 and then the 20. We may pick up a little bit of steam if it can break the 20, drop down to the 50s, the EMA and the SMA. And to tell you the truth, that's 40 points from where we are. 40 points. This thing's been moving at a much faster clip. I am looking for this to get back below 4,200, 4,100, and 4,000. And I would suspect that we're going to get there quickly. If you remember yesterday, when I laid out fibs for what we could expect for a B wave, and I actually attached it to right where we do have fib resistance and the 200 SMA comes in at 43.24, I'm going to call it. Right? So when it gets there, then we start to pull off, it's going to be that same levels that I called. We have potential to come down to 3,800. Right? 3,880 to 3,800. We're sitting at 4,300. So we're looking at quite a bit of drop. 500 point drop, 500 S&P point drop. So yes, it's going to be a very tradable drop. And a lot of people are going to be like, oh, crap, I just got in, blah, blah, blah. And so, yep, if it is the minor third wave, you're going to get killed because that one would require that the market drop below 36.39. But if it should be the intermediate wave A of a building primary B wave, then I'm just looking for a B wave to come down, and that one can get as low as 3,800. Below 4,000, below 3,900, most likely has enough potential to get itself down to 3,800 and still be a B wave and still produce an extremely strong rally, which would then take us back above wherever it ends up, break that level and keep on going, put in 5 waves for a C wave, an intermediate C wave, as I talked about last night, to complete the B wave up. What happens after that? A primary C wave down. So we still have a lot of downside to do, folks. I am not buying into that everything is rosy picture. Yes, there are some stocks that are extremely strong and moving like crazy. One being Apple, one being NVIDIA. NVIDIA trading at 190 after the company said, hey, we're not going to make $8 billion, folks. That's what you're thinking? Not going to happen. We're closer to 6 billion. Still not a bad number. But either that's what the public is saying. Oh, 6 billion, that's enough. We'll buy you up. I don't think that's the case, but we'll see. But here we have even the companies that have sent out warnings. The market is now saying, we know better. You're going to go up anyway. It's crazy. And that's what produces very strong short squeezes, which again, we saw on Friday. Again, we saw a little bit more today. And quick and violent turns. Because when the reality hits, excuse me, when the reality hits, it'll go. So downside, again, I'm telling you, I believe for the downside, we break all of these, we get ourselves down there. We'll wait and see for tomorrow. I believe open the potential that we're going to continue to rally. We're going to try to get up to that 43.28 to 43.50, up towards 43.60. Okay, have a great trading day tomorrow. Our next update will be on Tuesday, the 16th.